Hey, it's Mack with PriceActionTradingSystem.com. It is, I think today's Tuesday. I don't even know what day of the week it is. Yeah, today's Tuesday. It's June 2nd. This will be a chart lesson for today. And it was really just another range day, very similar to yesterday. We really found support a little quicker than we did yesterday, and then we rallied higher. We found resistance up here at the overnight highs. We broke a little higher and then traded back down for the rest of the day. So very similar to yesterday, very similar price action. I saw a two-tiered channel here. Notice that we got a break and we didn't get a retest, but look at this huge overshoot down here. And a lot of times when you get an overshoot like that, you won't get a retest with a new low. Prices may attempt to go lower or retest and may not make it. Um, but really, to be honest, at this point, when we bounced right here, I think you want to be playing the trading range. Um, you needed to be aware of this and cautious when prices got near it. But once we got a couple of traps here, and you had a clear trend line working higher, then I think you wanted to stay with this trend moving up and just play the range. So, uh, but I do believe this two-tiered channel is obviously valid. We just had this big overshoot in the um, overnight, and in the end, again, I think you're better off just to play the range, being aware of this channel working down and playing the range, and then being aware of the one working up, and still looking at the bigger picture is probably a range type day. So we did have some news that came out right around 9 o'clock, and that's probably what rallied the market. I forget which one it is that came out this morning around 9. I believe it was can't remember if it was factory orders or something. But anyway, there was some news at 9, and the market seemed to react positively to it and traded higher the rest of the day. So let's talk about the trades. Not a lot of them today, but there was a few pretty good ones. Um, Early on, we had this trend line working down. So you had to be real careful about going long in here. You were looking at the fact that we were swinging back and forth on the EMA. You had to kind of be aware of that, but it was tempting to go long right here. But look at that signal bar, and that's why I always tell you pay close attention to your signal bar. It traded really high, but by the time it closed, it was way back down here. So I don't think you want to go long there. So I think you're better off to sit tight, see what happens, and see if this channel plays out, and it does indeed turn out to be a failed second entry long and a trap. So I like going short right there. It's a quick, easy move. This is a little bit congestive looking, and the EMA is a little flat, so this is like a breakout pullback short. Um, I wasn't as crazy about that one. Again, look at the signal bar. It would have worked, but you just never know. So I think you had to skip that one. Then prices bounce. And this is two perfectly measured moves, equal um, sides on this channel. It's a two-tiered channel. Both tiers are equal. And then it bounces. It comes back, and it gives another test of this same price level right across here, this 2107. And that is also let me think about it. That's the open from the previous day. Um, I believe that's right. I believe that would be the open from the previous day. Um, your red is your low, your black is your close from the previous day, and your green should be your high, which is up here. So yeah, your yellow is your open. And you can see that was an important level all the way across here the rest of the day. Prices reacted strongly right around that area. But when you came back and tested this area twice and failed and came right off that trend line, I like that for a short. It is a first entry, but with all the other things going on, I liked it. I considered maybe making it green, but I think there's enough reasons to go short there that you want to take that trade. And then you get another pullback with a second entry short right here. It's not a perfect signal bar, so I would have probably waited on this one to break and then drop a limit order, and you could have gotten filled all the way back up to the high. If you didn't enter there when it turned down the second time and gave you this big bearish bar, um, enter there. I don't have a problem with adding on there, whatever, and this thing takes off. And so if you add it on, this was a great trade. And I'll be honest with you, I was through trading by 9 o'clock this morning. These were some great setups here and some pretty nice moves. And if you're playing it right, you can be done pretty early. This was a nice move, and I probably would not exit this trade. Any runners here until you got the next bounce here. You might have exited on this bounce right here. That's kind of congestive, but it's probably going to pull back to the EMA and try to test it one more time. But I probably would have exited when it held this second time here. And you do get a little trap here. It's pretty tempting to go long right there, but without a break of this channel working down, and the fact that we don't have a new low in place yet, the overnight lows are still down here. I just think you have to skip that trade. Um, and everything is down. The bias is down at this point. Prices do come back to this trend line, but they shoot right through, turn down, and bounce. And so it was a little bit tempting to go along there, but that's just a second entry. And again, it's not a great signal bar. So I think you're better off just to wait and wait and see what happens. It would have worked, but and it is a breakout pullback long from these matching highs across here. So if you want to be real aggressive, you might consider going long there, but I just think it's too risky. I think you need to wait till the failed second entry short, which comes right here, and look at that little reversal bar. Quick, easy move. You don't get any more than that out of it. It pulls back. You make a perfect double bottom. It bounces right off the trend line, working off those three bars, and this bar right here. And really the entry, even though this is your signal bar, this is your entry bar. This little bitty bar inside, I like going long above that bar. Everything's holding and closing above that EMA, above that trend line. We're probably going to at least test that high, maybe more, and that's exactly what it does. It looks like it's going to turn back down again, and you get that little trap right there in that big reversal bar. And that's the first break of this trend line, so we're probably going to try to make a new high, or at least test this high. So if you could get in that trade, I like going long right there. It really just gapped, and you can see it opened, closed on its high, opened on its very low, and just kept going. So you may not have been able to get in that trade, and it makes its new high. There's a second entry short right there that's really tempting. I probably should have marked that one in green, but I was a little bit leery of it because we only had one leg up here, and a lot of times you'll get two legs up, so I was really afraid it would turn down and bounce back up. Looking at it after the fact, I probably was reading too much into it, and I should have taken the second entry short and basically the double top and the lower high and all that. So it's a little bit aggressive still, but there is a good short there. But seeing it after the fact makes it a lot easier to make that call than it would be seeing it in real time. But when it broke 1 or 2 ticks lower here and turned up, I like going long there, because now you got a two-legged correction, and there's always a very good chance that you're going to get a measured move just like that right there. If you put that over here, you can see that we missed that by a tick, and so that would be your next target. Generally, when you get a two-legged correction in there like that, and notice how that resistance is now holding as support again, and I like that, and that's the measured distance between the top and the bottom of this range, and so I like that one. You probably want to use a limit order. That's the reason I marked it in green. It's a little bit aggressive, but these are the ones that will pay off if you catch one, and you can see it paid off well. Any runners would have been safe, and you could have ridden this all the way. I usually try to get out a tick or two in front of my measured move, just in case you don't quite get there like this. And then you get a little, I don't think you want to go short or long anywhere in here because you're getting too close and starting to get choppy and kind of sideways. But when you get that little trap there, look, you got a double bottom. Let me move this out of the way. You got a double top rather, and it tries to go higher and reverses and turns and go. Look how bearish it is. Just goes. You really want to go short right below that bar. Have your stop there, just in case. And it does turn down, and then it pulls back and gives you a little breakout pullback short because this is kind of congestive looking here, and off it goes. And you could have ridden that one really all the way down the rest of the day, and got out basically the market closing on its low from the afternoon move. So some pretty good trades today. Not as many. You had to be patient from time to time, just like yesterday. Yesterday there weren't a lot early on, and then towards mid-morning you had quite a few setups. Today you had more early on, and it got kind of quiet midday in here until late in the afternoon. So, and this trade got you into the 2 o'clock hour, and you don't want to be taking anything after that. I normally don't mark any trades after that. So, but yeah, pretty good trading day. Pretty straightforward. It was early on when prices are swinging up and down, back and forth above the EMA that, hey, it's probably a range type day. You still have to respect this channel that you see working down here, but you also want to respect the lows, any kind of lows that's set up or any highs that's set up, because the range may be the larger pattern, and that was the case here. The range was the bigger pattern, and we just couldn't go any lower than this 29 or 2097 or so. And so we headed to the other side, and we did break above it a little bit, but it didn't go very far. And again, that shows you these breakouts very rarely are successful. They almost always fail. And in the end, you wouldn't have known it this morning, but this was just a failed break at the low end of the range. Again, you probably wouldn't have known that unless there's no price action over here from yesterday. You wouldn't have known that early on. The only way you might was if there was some price action over there and you'd kind of noted it. But by the time you get in at 7 o'clock, you're already seeing the rest of this, and you're got to be thinking range early on, because we're swinging on both sides of the EMA, and that generally is a sure sign that, hey, it's range type action. Again, you have to respect the other things you see, but you don't want to lose sight of the fact that it's probably going to be a range day, or at least a range of morning, unless something with the news changes it, and it looked like it might be a rally day, but in the end it breaks higher, fails, and comes right back down. And we pretty much ended unchanged, because this was the open yesterday, and the close yesterday was here, so we ended up down slightly. All that price movement, and really we were off 2107 to 2.5 points from the previous day. So and we're still hovering around this 2100 area. Who knows how long we're going to be here, but that's irrelevant at this point. So, but I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.